If you've been watching the Orlando housing market this spring, you probably noticed it couldn't quite make up its mind. April, May, and June each told a slightly different story, and by the end of the quarter, the market had shifted from buyers who've got some breathing room to hang on, rates are back. March had been a strong month with sales jumping 25% as the spring season kicked into gear. April, by comparison, felt like a breather. Sales dipped 2.7%, landing at 2,539 homes sold, down from March's 2,608. But that's not really a bad sign, but more of a normal pullback after a hot streak. The more encouraging numbers were elsewhere. The median home price came in at $410,000 and change, up nicely from $404,000 a year earlier. New listings actually rose 3%, giving buyers more to choose from, and inventory sits at 11,418 homes, which is about 4.5 months of supply. For context, a balanced market is considered 6 months worth of supply. Homes were also selling a bit faster, spending an average of 70 days on the market. Mortgage rates ticked up slightly to 6.3%. May brought a nice bounce back. Sales climbed 6.5% to 2,708 homes, and properties started moving a little faster as the average days on market dropped slightly to 66. Inventory tightened slightly, falling to 11,531 homes as interest rates crept up again to 6.5%. Interestingly, the median price actually dipped a bit to $407,000, down from April's $410,000, and down year over year from May 2025 number at $415,000. That's not really a sign of a weakening market as much as it is of a settling. Prices have cooled off from the more aggressive gains of a few years ago during the COVID boom, even as sales activity picked up. Or as President Chris Atwell summed it up well, buyers had slightly more negotiating room than in previous years, but sellers who priced their homes thoughtfully were still seeing strong interest. In other words, it wasn't a free-for-all for the buyers, but it also wasn't the frantic bidding war you saw in 21 and 22. June is where the quarter's momentum hit a speed bump. Heading into June, mortgage rates climbed to their highest point in 9 months. Freddie Mac reported the 30-year fixed rate at 6.53%, a jump from the 6.2 to 6.3 range buyers enjoyed earlier this year. On a typical $400,000 home, the rate increase translated to roughly $145 more per month compared to late 2025. Zoom out, and the second quarter tells a pretty coherent story. Orlando spent April and May easing towards a more balanced condition, with inventory holding steady, days on market shrinking, and prices essentially flat rather than skyrocketing. Then June threw a curveball with rates jumping to their highest point since last September, which put a bit of damper on the momentum that the buyers had been building. Buyers who are financially ready are finding more selection and more negotiating leverage than they had in years past, but they're also navigating a rate environment that keeps shifting under their feet. Sellers, meanwhile, are learning that the days of listing high and watching multiple offers roll in are largely behind them. Smart pricing and a little flexibility goes a long way in this market. If nothing else, Q2 was a reminder that a balanced market doesn't mean a static market. Orlando's market moved every single month, just not always in the same direction. In the rental market, we saw the days on market fall to around 22 days by the end of June. Rental rates have stabilized in most areas. Some neighborhoods and markets were able to have a slight rental increase, but the vast majority are seeing similar rental rates to their previous tenants. It is still highly competitive, but much like the sale listings, if the property is prepped, shows well, and priced right, they're usually renting faster than normal. In conclusion, I think both the sale and rental markets have corrected following the COVID boom, and we are back to normal. We are seeing an increase of investors adding to their portfolio and buying new properties, now that prices have stabilized. And according to Chris Atwell, 1 in 5 international investors are buying investments in Florida. If you have any questions, feel free to reach out to me, Chris@therealtymedics.com.